Welcome to another week in review. We're going to be looking at the trading week of July 7th, 2025. Kick it off with data. There's not much, thankfully, this week after the action-packed week we had last week with the short week, multiple shortened trading days, NFP, etc. It was pretty messy as far as a data perspective goes. Clean price action mostly, but messy as far as what came out. So Monday we don't really have anything to worry about. Tuesday we have consumer credit at 3 p.m. I'm not going to be too conscious of that, to be honest. Wednesday, we do have the 10-year bond auction at 1 p.m., and we have the FOMC meeting notes coming out at 2 p.m. Sorry, 1 p.m. bond auction, 2 p.m. FOMC minutes are released. So if you're in positions, just know there'll be some volatility later in the day there. Thursday, we have jobless claims as usual, 8:30 a.m. And then 1 p.m. we have the 30-year bond auction. 1:15 we have Waller speaking. I actually do think Waller could put some volatility into the market, just with everything happening as far as swaps go, rates go right now. It's a little weird over there. So we'll have to pay attention just to see if anything happens there. And then daily speaking at 2:30 as well. And then Friday we have at 2 p.m. the federal budget. I don't really expect that to move anything. So weekly expected range is about 80 points. Depending on how you calculate it, it's about anywhere from 70 to 84 points, somewhere in there. So full week ahead of us. Expected range is not crazy. It's about a 1% expected range. Expectations for this week are kind of mixed on my part. So last week made a lot of sense as far as what happened. We had the Globex gap up on Thursday. We never actually filled it. These lows down here are quite poor. I do think we need to come back to these at some point in time. Maybe this week. We'll have to see. But as far as stats go and history goes, July 4th week, right before it, historically very bullish. July is a very bullish month. And then last week, obviously, stats leaned to expansion to the upside, which is exactly what we got. The big move that we had, the big move away from last week's range, started on Monday. You can see we consolidated. This is last week's high. We consolidated above last week's high. And then we had the breakaway on Wednesday. We had this really nasty, grindy trend up. And then we had M period spike base was up here at 6270s. I had that marked, but I took it away. 6270s. We held that overnight. And then Thursday, the short day before July 4th, again, stats leaned heavily towards this being an expansion up day. It's exactly what we got. The open was extremely aggressive on the buy side. And it just didn't look back the entire day, basically, until settlement. So we had a big expansion up for the week, and then obviously we put in this P profile here. And then Friday only was an ETH session, and we liquidated the entire day's range back into the RTH gap. This liquidating is not necessarily surprising. Doing so on a Friday with minimal volume is pretty evil. So anybody that was trying to short this, especially up into the highs that ended up closing, they would have watched this run back down. These types of days, especially on low volume, low net volume, are very prone to liquidating. That's exactly what we got on Friday. I didn't trade Friday, so obviously I had no trades in here, but the big thing for me this week, and the one thing that I was talking about last week, is whether or not we're holding outside of prior all-time highs and what that means for this market. So my baseline expectation for the next little bit after this gigantic move up that we've had on the daily is probably carving out a trading range up here and probably going to be cooling off either via correction via time, so starting to balance, carve out a big trading range, or correction via price, or both, which would probably take us back into this 6160, 6170 area, these prior all-time highs that we had, as well as the 20-day moving average. So the daily is very extended. The weekly is not. So I don't know why TradingView considers, I'm doing this in TradingView for the sake of simplicity. I don't know why they consider Friday's session a new week. I think this is a data glitch, but this is not a new week. This should actually be this weekly bar. So the weekly is not as extended as the daily, which also leads me to believe that, upside probably going to continue, but as far as the short term, I wouldn't be surprised to see us take back some of this range here and start to really build out a trading range up here. As far as like where I stand from an intraday basis, I think Monday early on, what I'll be watching is Thursday's low. So Thursday's RTH low, which is the bottom, or I guess the top of the RTH gap. These, again, this move down, this liquidation move down, also in the ATH session only, was done on very little volume, and these also can snap right back up. So Thursday's POC is naked. We actually got below it. We never actually tested it. So what I'm going to look for early on Monday, or even Globex, if we start bidding back above Thursday's low, RTH low down here at 62.93s, I'm going to look for the move back up, basically take back all this range and get back up into the main part of Thursday's distribution, up into Thursday's POC, into 63.20s. So that'll be the move I'm looking for if we're back above 62.90s, and then if we start building some range, building value up here again, and we can hold up into the 63.20s area, then I think the likelihood of the extension and continuation higher up into the extension of the prior monthly balance into 63.80s, 63.90s is quite likely. And if we jump into the daily chart again, it's up here. So this huge trading range that we carved out has also been pretty instrumental and pretty easy to follow here. So the range we broke down from, tested, liquidated, broke back up, actually gapped above it, moved all the way to the midpoint, held it again, and then broke out of. So if we're looking at this huge trading range that we've carved out, 150% of this is up into 63.80 to 63.90, and then 200% would be 6,600. That seems like a stretch to me in the short term, but you never know, right? Like if we come back and start holding 6160s, then the move up here is entirely possible. But baseline expectation for me is that we're probably going to start to build out a trading range up here. So that's how I'm going to look at it from the long side. If we're back above 62.90s, I'll look for the move back to Thursday's POC at 62.20s, and then above 62.20s, I'd be looking obviously last week's high, and then if we're above last week's high, it'll be only longs for me up into the 63.80 to 63.90 area. I do think if we get up here, the weekly expected range from a straddle perspective on Thursday, I guess, weekly range is possible up here from that perspective. I do think we'll find some responsive selling if we do get up here. I'm also completely open to fading this market if we're not able to stay above 63.20s. So again, if we come back up, we take back this range we put in on Friday, and we start finding sellers up here into last week's high. So potentially the 20 to 30 range, if we find some responsive selling up here, if we sweep last week's high and we fall back below, again, I'd be very open to fading this market and looking for the moves back down into the meat of last week's distribution, down into 45s, into last week's POC, and ideally finally clean up this stupid low at 62.20s, and then see what kind of response we have down into last week's RTH low and the Globex gap that we put in. At some point, this area needs to get cleaned up. I think it's possible if we're failing up here, or I think it's also possible if this market does want to cool off pretty much immediately and we're finding acceptance back below Thursday's range, back below the RTH gap at 62.70s. So that's the other thing, the other side I'd be looking for from the short perspective. If we're back below this RTH gap and we're trapping this range up here for now, then we could see a short-term correction as well this week, and I'd be looking for the move back down to the meat of last week's distribution. So testing the B period singles we broke out of at 54s, last week's POC at 44s, and ultimately likely more down into 62.20s in last week's low. So basically using this gap as the gauge, I think, is going to be the simplest way to look at this week from early on, I'd say. And I will stay short if we're below this. I'll look for the short trades to get back down into here, down into 20s, and potentially all the way back down to the cash index highs. That'll be about a 1.5-2% correction down. And if we find a decent low start getting put in at the cash index prior all-time highs here, which would be, you can see, 6140 is basically probably more likely down into the 6100 area. If we find a decent low get putting in there, then I'll be looking again for a larger long trade to continue the moves up. So NASDAQ is going to be relatively similar. Again, I'm going to be using the gap as the early gauge. So if we're back above 22,930s, if we're back above the RTH low we put in on Thursday above the gap, then all of this range on very low volume that got put in on Friday is likely to get taken all the way back, and I'd be looking for the move back up into the meat of Thursday's distribution into this 2330 to 2360 area. And again, if we're accepting up higher than this, or we're accepting up here, willing time and volume back up above, and we can get back above last week's high, then the extension trade on the NASDAQ, which we're closer to, would be looking for about 23,280s. And again, same idea there. I do think we could see responsive selling up there as well. Similar idea here too. I think as far as where the risk is for NASDAQ, especially from a long trade perspective. So if we're back below the gap and we're below last week's POC, as well as this is a fairly important pivot up here. It's a prior weekly high. It's a weekly POC. It's the meat of last week's distribution as well. I think if we're below 22,830s, which would likely coincide with us being well below the gap on ES as well, B period of this move up, I don't think is going to hold. I'd be surprised to see this hold if we're back below all of this distribution up here. We could find a low into 22,770s, but I think below 22,830s will at least test this, and there's a liquidation risk to last week's low below 770s, and I would stay short looking for that move down into 22,600s. So I think as far as things to consider is that every major time frame is one time framing up still. So this day doesn't really count. It does. It was traded. These numbers were printed. There is volume here. But again, it's only an ETH holiday. It's ETH only. It's very low volume. It's holiday trading. So while this looks pretty nasty, at the same time, we have to take it with a little bit of grain of salt, considering the fact that it's only ETH, and we don't have a lot of volume that actually got put in here. So where this becomes, more serious is, if we can't continue to accept above the gap that we put in on Thursday. So we start getting below that 6280 area, and that takes us back into the bottom of last week's distribution, very likely. And then if this gets completely erased, if we can stay above the 6290 area, we completely erase this, we get back up, and we start bidding 6320s again. Then again, the extension trade up into 6390s, I think makes the most sense to me. So hopefully that helps. I'm gonna try to keep it fairly simple this week. It's a full trading week. There's not a lot of data. We do have Wednesday to pay attention to with the minutes, and we have a couple bond auctions to pay attention to this week. But as far as areas to pay attention to, I think it's there's fairly defined areas this week which we can manage around and kind of form a bias a little bit, and see if there's any potential, see if this is real, and if there's any potential real start to some sort of trading range getting carved out, cooling off the daily time frames, and then starting to see if we're building value back above prior all-time highs, or if there's lack of acceptance above prior all-time highs. So I'm really not bearish this market. I know this is very extended. I know everybody online is looking for a massive crash here. They have been for months, and they've been getting destroyed. So as far as bigger picture to me, again, I'm a day trader, so it doesn't make a lot. It doesn't really matter where this market goes to me, but at least in my opinion, carving out a trading range up here, and then maintaining the 6100, 150 area, maintaining above these prior all-time highs. If we come back down, a very normal market and a very healthy market will cool off, and we'll easily back test this range and potentially down into the 20-day moving average. And if we hold this, we just stay long, basically, right? I don't really get, bearish bigger picture until we're closing weeklies back below 6160s, and this breakout that we have starts to fail. So this weekly break that we have, if we start to fail this, if we start closing weeks back below 6160s, then potentially a larger correction back down into the midpoint of this balance, back down into these prior weekly lows at 5900s. Maybe that's on the table, but again, it's all day to day. So hopefully that helps. If it does, please like the video. Please subscribe if you haven't. Most people that watch these videos aren't subscribed. So if you find any of this helpful, please do that. That'd be great. It'd mean a lot. Thank you for your time.